Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, March 12th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'll start with the big picture as always, work my way into the day itself. This is a channel structure that starts with the July high of last year. We tested the top most recently late December. That was a targeted resistance area based on a previous buy signal. The 248.79 channel top did contain buying, at longer-term buying. At the time, we had mentioned that testing that 248.79 channel top you should allow for and can prepare for what at that time was the mid-170s, now the mid-160s channel support, dropping also at the same rate. And now that we've tested channel support about 2 months later, we've been mentioning really since this low here about a month and a half ago how you can prepare for 248.79 as a 3 to 5 month upside possibility. It doesn't become a probability from our perspective until or unless we can close above this narrowing band of resistance between 204.95 and 212.98 on the weekly chart. New descending 1/3 speed line based in part on last week's low, and 204.95 is a simple horizontal channel structure that is based on the last month and a half of trade. This area narrowing gradually and able to contain monthly buying pressures when tested, which is to say perhaps through April, and from there we could fall away again back into the mid-160s. In fact, while we anticipate the possibility of the upper 240s over the next 3 to 5 months, we also recognize that inside of that, we have this 3 to 5 week two-sided dynamic that can play out through April trade. We could test 165.85 possibly this week, and from there, within 3 to 5 weeks, rally back into the low 200 area and vice versa. We could spend the next couple of months trading inside of this wedge. And I'm speaking to not only 3 to 5 week position traders who trade Tesla both long and short, but also options traders. So as we're testing the 165 support, you may consider reaching for 200, 210 strike out of the money calls that don't expire. I would go out 3 months on that expiration. It's a 3 to 5 week play, and you don't want to see your option premium decay through time erosion as you approach your objective. It would be a settlement above the 212.98 speed line in the coming weeks that would then clearly indicate the 248.79 to 256.07 region as our next 1 to 2 month target. But we do know, given the way channel structures play out, channel dynamics, that testing this support in the 165.85 area, this 248.79 level could be considered, the metaphor I like to use is a magnet. The market is drawn to it, and the chances are decent that we'll reach it. You can prepare for it. As we're testing the 165 handle support, you could reach for instance, 245 strike out of the money calls that don't expire for at least 6 months. I would go probably a year out on that expiration just to preserve kind of your bang for your buck in the delta factor, the rate at which the option premium changes relative to the underlying stock itself. That is the big picture. And inside of all that, inside of this two-sided structure I'd mentioned for the next 3 to 5 weeks between the 165 roughly area and the low 200 area, we do have we have a former channel bottom that we closed below about a week ago at 185.14. That is our intraday resistance. Can contain intraday buying pressures, possibly daily buying pressures. So I'm talking to day traders, aggressive day traders, potentially 3 to 5 day swing traders. I mean, if you can top out at any point for a full day, you really never know how the next 3 to 5 days will play out. So we could test 185.14 and within 3 to 5 days actually test that 166.86 channel bottom, which is the same channel structure on the daily chart that we find at 165.85 on the weekly chart. On the way down, very simply, last week's low area, kind of a double bottom here. That was a Wednesday, Thursday low of last week, 173.70 to the very tick 2 days in a row. If we break 173.70, I do see 166.86 as possibly in reach by the closing bell. I will say that closing below 173.70 should actually yield 166.86 tomorrow, where once again we can bottom out on the daily chart. That is 166.86, and on the weekly chart, once again, 165.85, where we could bottom out through April and even through the second quarter, because above which, as I've said several times already, that 248.79 formation is sort of calling the market, and over the next 3 to 5 months, we can reach it. And over the next few weeks, if we happen to close above 212.98, we are clearly expecting it within a month or two. Let's talk upside again today. That if we happen to push through 185.14, 192.04 is in reach. This is a former 2/3 speed line. We've got both the channel and the speed line here on the very same day, and that was about a week ago. We closed below both. We gapped lower. We gapped below the speed line, closed below the channel, and so 192.04, I still like it as sort of your short setting area as we move into next week. It is a speed line. It is a line study that correlates well with Fibonacci levels that are like 5/8 to the upside, half 5/8 to the upside, this old sort of congestive low, these highs. I mean, as this thing moves upward in time, it intersects all that stuff. So I do like it as an area that may well contain weekly buying pressures. And from there, we could fall away again over the following couple of weeks to 166.86. If we close above 192.04 any day this week, and I don't see that happening on Tuesday, but if so, then yes, indeed, looking for, this is the daily chart version of the same, looking for 204.98 within 3 to 5 days. 204.98 is the same horizontal channel top that we find on the weekly chart at 204.95. Are they the same number today? No, 204.98. So they are in the same vicinity. Once again, that area expected within 3 to 5 days of closing above 192.04, the 204.95, the 212.98 region, able to absorb buying through next week, even through April. From there, we could fall away back into the mid 160s again within 3 to 5 weeks. Once again, it would be a settlement above 212.98 that would clearly indicate the 248.79 to 256.07 area within a month or two, where we could top out on a quarterly basis and fall away again. Last thing I'm going to say, and I don't see it happening today, I'm going to look at that daily channel bottom. I mean, it is possible we could close below 166.86, but I really think it comes down to the end of the week. That if we close Friday below the 165.85 channel bottom on the weekly chart, then yes, that should be by a 1% degree of 164.20 on Friday afternoon or lower. That sets off a significant 2 to 3 month sell signal back into the upper 80s to low 100 area, 89.10 to 101.81. And if you bought any of those out of the money calls prior to the settlement, if we do settle below 165.85, they should be liquidated. And in turn, you may reach for, 85 or 90 strike out of the money puts that don't expire for at least 6 months. But we're not anywhere near to that happening. But who knows? A lot can happen over the next 3 or 4 days, and we'll just see if this market is inclined to continue south to 166.86. We did have that indication, by the way, about a week and a half ago when we closed below 192.04. I've been maintaining 166.86 as a 1 to 2 week objective. We are 1 week into it. And so we also have extra selling pressure tendency below 185.14. So yeah, 186.86, 166.86. I'm sorry, in reach this week certainly. And if we break or open today below 173.70, we just might see that today. I think that pretty much rounds it out for Tuesday's Tesla report. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Tesla, and you have a great day.